Welcome back, everybody. My name is William, always here with iMan from the Block Runner, and we're going to be talking about the GRT.
Gert, dude, good old Gert.
The graph. Dude, look at this beautiful destruction here.
That big green candle, dude.
Yeah, look at that.
I'm talking about, dude.
All right.
So
So
we
what's...
had to hop on like as soon as we saw that Gert was mooning, right? Just to kind of like fluff ourselves a little bit,
Yeah.
because we've made previous calls about this project. I guess because this is a perfect example of like our like investment philosophy, right?
Yeah.
There's tons of like moon boy activity. Like right now, Binance Smart Chain is popping off, like just like copycat projects with like food names to them.
Yeah.
They're going ballistic, but dude, we're not really paying attention to that because it doesn't align with our investment philosophy, right? But GERT does, dude. Like we recognize fundamental value into projects, and we're about to explain why.
If you were following us, and saw this video January 17th, this is about when this video came out. Let's look at January 17 is about right here. So this is about a 40 to 50 cent the graph price, and it's close to a 5x since then. So those of you who've been paying attention, congrats.
Continue to sub along, you know what I'm saying?
Yeah.
Like shameless.
Yeah, like and subscribe, share. So we're focused on like the fundamentals. We're here for the long run in crypto. As a matter of fact,
we stuck around through the whole fucking bear, dude.
Yeah,
like,
we did.
we felt every inch of pain possible during that bear phase. You know what I mean?
Yeah, and we're about to drop a podcast where we discuss, what the United States might do if we have the, Oracle and Google and Apple buy into Bitcoin, and potentially what might they do, right? What's their retaliation to that?
Response.
So
what's the response of like a multi-trillion-dollar industry just like booming right in front of them? Like what's government going to do? We're already seeing examples in like smaller governments, like like India, like they're doing threatening suggestions of banning the cryptocurrencies and whatnot and launching their own. So I don't know, it's kind of like kickstarting that whole that conversation.
So if you don't know what the graph is, essentially think of a developer. So before the graph. And the developer says, I want to build an application, but I need a bunch of blockchain data, right? I need prices here. I need, information from, projects like traction and user base and all this stuff. The developer would have to go to all these different websites, collect a bunch of APIs, and put them into their application. And anytime that their website went down or some other update occurs with, some platform where it breaks the API, your application, the developer's application breaks. And so it creates this huge issue for a developer to keep their own application maintained. So here comes the graph, right? A decentralized way to query the blockchain data. And so now the graph essentially takes all the information from different projects and aggregates them all in one location. And so what they call their APIs on the graph subgraphs. And so, for example, you have a subgraph for Uniswap, LivePeer, Decentraland, and a whole bunch of other projects, right? Well-known projects.
Speculating here, every project probably at some point,
Yeah, that's right.
Just we're seeing almost every project integrating with Chainlink. It serves that fundamental of the service to the developer community, right?
Yeah, and just to give you some perspective of where the graph is on the charts, it's number 36 at 2.3 billion market cap. So it sounds kind of high, but this is like one of the foundational pillars of the cryptocurrency industry.
Yeah, I think like the sector, like the market is just now starting to pick up on the importance of this, service, just like it took them a while to pick up on, Chainlink. And then there's like a whole price discovery phase that has to happen now. I mean, I'm expecting, Chainlink and the graph to kind of like exist neck and neck with each other, because they kind of do like the inverse action. Chainlink brings off-chain data on, graph brings on-chain data off. So it's like a yin and yang type. You know what I mean? Yeah. So there's no goddamn reason why this ecosystem can't grow to like a Chainlink level one, right?
So that's a $11 billion market cap. So you guys can do the math from there.
So there you go. For all y'all who hope, expecting price predictions, there it is, bros.
Yeah.
There's the price prediction. But also another prediction I'm making is just like we saw with Chainlink, oracles became like a whole sector in itself. Dude, we're so many oracles now.
That's true.
There's going to be a whole new network of these subgraph aggregators. I don't know what they're going to call them. Yeah, what do you call this? Is this like also an oracle? What do you think?
Yeah, I guess it could be. But you're right. I think the graph, once people get really understand like the importance of the graph is going to see competitors, right? Just like Chainlink has competitors.
Yeah, so keep your ear to the ground, wait and see these projects kicking that idea around like, hey, we're better than the graph, even though they usually aren't.
Yeah.
Like, still opportunity there. You know what I mean?
And so one of the cool things about the graph is if you hold graph tokens, you can actually delegate them to indexers. So what is an indexer? We've been doing a ton of research on this because to decentralize a project, it's incredibly complicated. There's so many moving parts to a decentralized ecosystem that that indexers play a huge role in the graph. And so indexers are basically the muscle that provide the data to the developers. The indexers actually index all the data that's on the blockchain through subgraphs that are built by developers of their respective projects. So we have indexers with these huge computational horsepower sort of supporting and hosting these subgraphs so that other developers out there who need blockchain data, like from Decentraland or from Chainlink or whatever, they can go to the graph and actually extract that data by querying these subgraphs or calling these subgraphs. If you're watching this video, you're more likely a potential delegator, right? Just a retail investor who's holding the graph tokens.
Yeah, you want to know how to get involved, right? Okay, there's this ecosystem for developers, big deal, right? I'm just the guy with some cash.
Yeah.
Well, like, how do I get involved, right? Like, why does this matter to me? Other than I could buy this token and speculate on its future, promise.
Right. So what you can do is essentially you delegate those tokens to an indexer. Yeah. And here on network.thegraph.com, you can actually see all the indexers that are participating in this ecosystem. And if you're a huge decentralized maximalist, this is still centralized for now because they're moving from their centralized servers to a decentralized network where these indexers are going to be hosting pretty much all the subgraphs. And so here's what we're looking at. So each indexer that you're looking at here has a query fee and a rewards cut. A query fee happens when a developer queries the data that's on a subgraph. And so there's a fee associated with that. And then the rewards cut is the graph has an inflationary component to it. So it's 3% per year that it inflates. And so those rewards from the inflation go to the indexer and the delegators.
Do you know if these are like minted daily or like weekly? Is there a schedule period to the minting of the new tokens?
I think they're minted daily, I want to say, because they have a thing called an epoch. And an epoch is measured every 24 hours, roughly.
Okay, cool. Yeah, that makes sense.
And so what you're looking at here is the query fee. 97% of this query fee goes to the indexer, and then the rewards, 96% goes to the indexer. So, if I were to tell you that there's an indexer that is keeping 97.8% of query fees and keeping 96% of the rewards, what would you say about that indexer?
Probably a little greedy, brah.
Yeah,
like it seems greedy at face value. So I would imagine they're not going to get not a big delegation. You know what I mean?
Yeah.
And evidence to support my assumption.
Yeah, that's exactly right. So this particular indexer is actually staking 135 million GRTs, of their own, right? And
because they have to, right? Like, that's how you keep indexers in check, right?
Yeah, because if they do anything wrong, if they screw up somewhere or become shady with like sending wrong data, then they get slashed. So this GRT here by the indexer is slashable. So there's something at stake here. Exactly. Now, if you delegate, there's no way to get slashed. So there isn't a slashing component to delegators. So your GRTs are safe. But your job as a delegator is to figure out who to delegate to maximize your returns. And this is not a good indexer because it's not there isn't a whole lot of sharing of revenue. Having said that, there's a chance that this indexer is doing such a phenomenal job hosting these subgraphs and has such a low query fee to the actual query of the subgraphs that they generate so much money that they still yield indexer rewards. So you could still generate some passive income through an indexer that is keeping most of the returns. I mean, that's a risk that there's a risk to that, right?
Yeah.
So for every time you delegate, it costs you 0.5% of your GRTs. And then if you want to undelegate, there's a thawing period of 28 days. And so if you want to undelegate, you have to wait 28 days. Okay. So let me give you a good example. So if you click on this, you can sort by query fees. And
yeah, we're kind of like speculating at this point, like the best approach. Like the first thing you want to do when you come to this portal, right, is the first thing I would do is search the query fee, like sort according to query fee, because that's the indication of like how well of a job the indexer is doing, right? The
That's
higher
right.
the query fees they've collected as revenue means the more queries they're generating.
Yeah,
so
that's right.
We're doing something right. That's something you want to look at these reliable indexers off the bat, and then you can start making your delegation diligence from there.
Yeah, absolutely. And so you can see here that 2,600 queries from ProtoFire. And look at this query fee cut. They're only keeping 10% of the query fees, and they're keeping 15% of the rewards, which is remember the inflation rate.
Okay, still pretty hot.
And they're distributing 3.2 million GRTs to their indexers. And so right now, 216 million GRTs are being delegated.
Yeah, so clearly this seems to be like a much more favorable scenario for us, the retail, the ecosystem participants that, we're not the developers, the coders, we're not supplying the hardware to index all of this data, but our money is at stake as well, and they need us in this ecosystem in order for it to sustain. These guys are choosing, what are they called again?
These guys are choosing ProtoFire.
So another cool feature that you kind of figured out, I mean, a good little hack is to kind of just go directly to these entity sites, right?
Yeah. So the one that we found that was really clean was P2P org, and we have that. And they have a pretty clean site. And what they do is they delegate to all these. They do staking for all these projects.
Yeah, it's like staking as a service, it looks like. That's strength,
So if you want to learn specifically what they do for the graph, we click on this link. And all the links will be in the description, by the way. And it looks like you make 15% APR on delegating with P2P org. And they have, all kinds of explanations on everything, on, just explaining what the graph is, just the Q&A here.
Yeah, regardless, it's a good thing. It's a good, practice to do from now on when you're trying to make these delegation decisions. Like, don't just go to that portal and decide purely off of that. You got to do a little further digging, right?
Yeah.
Actually, the history of these indexers. And
remember that one that had 96% and 98% over here?
Yeah.
Well, that's Lemniscap. And what they are, there's essentially like a VC firm. They're an investment firm specializing in investments in emerging crypto assets. So they have obviously so much money that they don't need delegators to profit from this. So that's why they're keeping almost 100% of everything. But you wouldn't know that. You wouldn't know unless you did a search on Lemniscap and understood why they're keeping 100% of everything.
Yeah, totally.
So definitely do your due diligence before you stake with anything. And remember, it costs 0.5% of your GRTs, and there's a 28-day waiting period to undelegate. So there's at least something at risk when delegating.
Yeah, correct. And I think all these reward percentages and stuff, I think the indexers have the power to kind of adjust them at will, right?
Yeah, that's true.
So always be mindful of that too. You can't just dump your delegation into something, then go AFK for a year, come back, and go, yo, what the fuck happened to my 30%?
Yeah, that's right.
At some point they swapped it 2%. You never know.
Yeah, and so just going back to these guys, 98%, and you look at their query fees, they're getting hit up, right? They're doing something right. It's just there's not a whole lot that's being distributed to their delegators because there's only 6 million being delegated. That's I think that covers everything.
Yeah, that's the graph for now. I mean, I'm sure we're barely in the beginning stages of this too, right? I think this went live a couple months ago.
So they're still transitioning to a completely decentralized nature, which is in progress. But yeah, all the links will be in the description, and hopefully you guys understood a little bit more about how the graph works, why it matters, why it's probably going to be in the top 20 pretty soon. Right now it's at 36.
Yeah, I think the chain link and the graph comparison is, I think
that's spot on, dude.
Yeah, we definitely didn't like start that comparison. That's the comparison that kind of like brought our attention onto it, I think, I guess.
I mean,
we actually have like personal experience using the protocol too now.
I mean, we did call it, right? So
yeah. So this is a good one, man. This is a good one to keep your eye on. If you kind of like do a history lesson from like last cycle, there were certain projects, like if you would have bought in 2017 and held even to today, those are like life-changing buys.
Yeah.
Like chain link being one of them.
Yeah.
I don't know. There's others out there. Aave. If you're buying Aave, which was ETHLend back then, and you're holding it till now, that's like you probably got like a 200, 300, 400, 500x or something like that.
Yeah.
So this is one of those future blue chips you just don't want to let go of. You know what I mean? Now that's not financial advice. If you want to trade this thing, it's up to you. Just saying, like, this is one you could sleep good at night.
Oh, for sure. Yeah, I mean, we're sleeping pretty tight with this.
And that's exactly how I like it, man. Yeah. Like, I can't sleep good with, like, meme coins, you know? Like, I can't hold on to them and then, like,
Because
like,
the terror is that you're going to look at your CoinGecko app and then you see, like, your shit coins at 100% losses.
And it's actually happened to me multiple times. And like I still don't learn my lesson. But I'm not gonna like bring that energy into our channel.
Yeah,
you know what I mean? I don't want any of y'all watching this to go through that, dude. That shit sucks.
Definitely not. So hope you enjoyed this video. Make sure you follow us at the Block Runner and also at MetaZone.io. Let us know what you think about the graph. And I mean, I think this is going to be one of the more staples in the cryptocurrency industry, but time will tell.
Right.
And let us know what you think, and we'll see you in the next video.
All right. Peace out.